Welcome back to the Mining Market Signal. My name is Seth. You're watching Mine Your Biz, and if you're not subscribed, I think now is the time to do so. Jumping straight into the Fear and Greed Index. First off, smash all those buttons. Be sure that you have the bell icon turned fully to all notifications turned on so that you see all of our new episodes coming out. But Fear and Greed Index is currently a score of 37. Up from 33 from yesterday. Last week, of course, we were still living in fear as we are today, but not extreme fear as per last month. Taking a look at the trend, about a month ago, we were definitely in extreme fear. No denying that. Exactly 1 month ago, score of 10. Till fast forward to today, today's score of 37, showing that we are making something of a recovery in terms of people's overall mindset and feeling towards cryptocurrencies. This is a chart that we can see over on TradingView. This is the one that's publicly published or publicly available. As you can see from the link down in the description of this video, this is not something I shy away from, but that said, it's also not intended to be legal, financial, or business advice. This is not a technical analysis show. I don't offer any kind of indicators or any kind of signals for when you should enter or when you should exit the market. You need to do your own research, and you need to be responsible for your own choices. Now, getting that out of the way, look at this chart once again. These are the ranges that we've been tracking over time. And with these ranges, you can see that we are well outside of the green area. Again, we're back up into this yellow range of above $40,000 per Bitcoin. And I think for my part, I've been very public about it. We're outside of the territory where I think it's an obvious DCA area, DCA range. Some people are calling for the price to move higher. Certainly, the moving average convergence divergence, our MACD indicator down there at the bottom of the screen, is showing us a much stronger divergence. See these green bars right here? That's our MACD histogram, and it's showing us that we're bullish and that there's an increasing divergence as those little units go higher and higher. This is a one-day chart. I don't look at anything other than that, kind of a little more zoomed out. It just does not serve me very well with my current skills in this space. But this is where we're looking at today. We were on a downward trajectory for quite some time. This descending triangle, we nearly snatched the very top of that wick upwards on the day using just that simple descending triangle. Nothing fancy to it, no special indicators on Ichimoku clouds, nothing else, not even RSI, just the basics of MACD and kind of gut level instincts. But we kind of bounce downwards towards where we are right now. However, the recent price recovery and the influx of volume from that reversal here, that recent price recovery is indicating that, who knows, maybe we will continue to have really great price upwards and continue to break into this new territory. That said, daily volume right now, not super high. Maybe we'll see a return to higher volumes tomorrow on Monday, when markets resume and maybe when Asia wakes up tonight. But as it is right now, sentiment has improved. That tends to happen when the price has gone up. Fingers crossed, we continue to have good feelings about what's going on. But typically, you've heard me say this before, I think a stronger reason for the Fear and Greed Index moving back up is not so much just the price action. This is only telling us what happened in the past. It's not telling us what's going to happen in the future. But the news. So what's happening in the broader cryptocurrency news across Twitter and Reddit that will influence people's emotions? Well, let's take a look over at You today. One of the first articles that we have is about Shiba Inu. Really? Dog coin? Competitor to Doge that completely overtook it by way of market cap? Yeah, that one. The Shiba Inu coin. Pretty amazing stuff coming out of there. They're talking about having their own layer 2 scaling solution to Ethereum in order to alleviate the gas fees for entry-level, retail participants in their ecosystem who are getting slaughtered by gas fees. Let's just look at the numbers here. Look at the facts. We could open up TX Street as we typically do on this show. So txstreet.com, open that up live. You can see that this is where we get our gas fee information for this show. But let's open that up and take a look. Automatic launch, hit our visualizer of, there we go, Ethereum gas prices. But on the left, we can see, let me go ahead and just show us exactly what we need. Yep, median transfer fee, pending transactions. Nope, let's go with median contract fee and gas fee. I think that's really what we need. So get rid of latest block, get rid of pending transactions, just our fees. All right, what else do we have? Median gas price. And now we'll just see that stuff I think that is most useful to us right now. Turn off notifications as well. Looks like currently just to send any kind of smart contract, there you go, contract fee of $46-ish. So sending any kind of a ERC20 token or an NFT would cost you roughly $46 US. That's just not sustainable for Johnny Crypto New Coiner, who only has $5 to spend on his favorite coin. Maybe he's interested in Shiba Inu because he saw it on a YouTube channel somewhere and thinks, I'd like to try that out. Maybe that's going to work for me. That's just not going to be practical for that person. So a $46 transfer fee, not good. And it seems that the Shiba Inu team has been working on that by way of something called, what was it called again? Shibarium. There you go, Shibarium, a layer 2 scaling solution for the Shiba Inu cryptocurrency. And it's going to be released very soon. They don't actually have a release date, but they do have a testnet, and the second version of that testnet has already launched. I guess it's just everybody gets their own second layer or their own scaling layer to Ethereum season. We got Pulse Chain coming out because the Hexians are not happy with the price of transactions on Ethereum. Now we've got all the Shiba Inu people coming out with Shibarium because they're not happy with the same fees, and everybody wants to have their own layer to deal with those fees in their own way. They say Shiba Inu devs plan to develop an algorithmic stablecoin as well called Shi that will be operating on both Ethereum and Shibarium. So these guys they're going for the gold. They clearly took a play out of the Pulse Chain book and out of the Hex book and said, you know what? We can have our own scaling solutions too. But you tell me what you think in the comment section. Is this doomed to fail? Or is this important? Should we see more projects doing things like this? Would this actually help alleviate some of the congestion on Ethereum and on other networks if everybody created their own scaling solution to go with their own token? Tell me in the comments section. But let's move on in our news articles. Bitcoin Magazine releases this really great piece. Actually, I really enjoyed this. Co-written by Mike Hobart and Tyler Bain just a few hours ago, about how during the House hearing on crypto's energy usage and impact, there was a point of opposition provided with this phrasing and through this frame of the number of jobs per unit of electricity consumed. And they go on to say, well, they're not bothered by the question. It's probably fair. However, I do think it's asked in bad faith in order to frame it in such a way that Bitcoin looks bad, right? That's the reason that they ask it. That's generally speaking. They made up their mind. They didn't ask a genuine question. They asked something they thought would serve their interests in making Bitcoin look bad in that way. And I love that the authors chose to look at Microsoft, my former employer of years ago, as a former senior national trainer at Microsoft. Some of my personal stories that I chose to more aggressively lean into the free and open source software movement, including Linux, privacy tech, and blockchain technology, because I was not very happy with the result of my work in advocating the Microsoft ecosystem. Not a bad company, not inherently evil, but definitely, I think, part of the larger de-anonymizing and anti-privacy movement, right, from Web 2, a holdover from years ago. I think it needs to be reformed. But they chose to look at Microsoft and looked at some numbers from 2019. At about 144,000 employees, and the only power consumption figures they could find were from 2019. These are the charts right here. But let's cut to the chase. All the way down says about 9.2 terawatt hours of electricity in that year versus the 144,000, roughly, give or take, employees that they have. Goes on to talk about how the nuclear reactor, a nuclear reactor in Kashiwazaki, Kariwa, Tokyo, that their reactor has a net capacity of just shy of 8,000 megawatts. So for conversion's sake, there you go. I think they broke it down to Microsoft being able to use roughly 13% of that amount. 13% of an entire nuclear reactor is used by Microsoft annually, and boils it down further and then says roughly Microsoft's energy consumption per employee equals that of approximately 4,000 households each, or 4,000 homes in Japan that are running on nuclear power would have to instead be diverted to each and every single employee of Microsoft. So I think the House Committee's question, I think their framing of how much energy Bitcoin consumes is asked in bad faith. And I love that this framing is done this way over on Bitcoin Magazine. I think it's brilliant writing here. They say, is this really a metric that Bitcoin's opponents want to use to try and argue against supporting this network and this asset? Says, can we please criticize from honest and even fair grounds? Amen. Hear, hear, and yes, sir. I agree. I concur. We should definitely try to choose better hills to die on, or maybe try not to die on hills. Maybe we can just try to work together and come up with better solutions if we do think that we see real problems. But don't try to invent problems that don't really exist or reframe problems that are actually worse in other sectors. But moving on, guys, some of the news that I wanted to cover with you. This is over on the Daily Hodl. The U.S. Treasury Department has issued a warning saying NFTs may be used for money laundering. Oh, it might be happening. It could be happening somewhere. Maybe somewhere somebody is using NFTs for money laundering. Well, let's talk about that. The U.S. Treasury Department is issuing a warning to investors that non-fungible tokens could be used to launder money. And let me just read in its entirety the quotes from this study. It says the emerging online art market may present new risks depending on the market, the structure and incentives of certain activity in this sector of the market, i.e. the purchase of non-fungible tokens, the ability to transfer some NFTs via the internet without concern for geographic distance and across borders nearly instantaneously makes digital art susceptible to exploitation by those seeking to launder illicit proceeds of crime, because the movement of value can be accomplished without incurring potential financial, regulatory, or investigative costs of physical shipment. NFTs can be used to conduct self-laundering, where criminals may purchase an NFT with illicit funds and proceed to transact with themselves to create records of sales on the blockchain. The NFT could then be sold to an unwitting individual who would compensate the criminal with clean funds not tied to a prior crime. They don't even know what they're doing here, but they're describing the process of ladder trading or insider ladder trading within NFTs. We need to talk about this on a different episode. This is kind of a known issue among collectors where they pump their own values by essentially wash trading with themselves. But they're talking about how this could be done for criminal purposes. They say it is also possible to have direct peer-to-peer transactions of NFT secured digital art without the involvement of an intermediary, and these transactions may or may not be recorded on a public ledger. These digital art assets are inherently easier to transfer between transacting parties than traditional art because, in most cases, the parties do not need to physically move the art or pay for shipping services such as insurance, transport, or customs duties, although users may incur transaction fees. There's a complete study. I have linked to this article, so you can link through from there. I'm not going to bother to link that article as well. But the U.S. Treasury Department is here to tell you that you can do things permissionlessly to transfer value. And I think that they're finally starting to catch on to the full ramifications of cryptocurrencies and blockchain tech in general, which is to say they are out of the value chain. So they're trying to warn people, you could be complicit in crime if you do this. How much of this world is actually helping to facilitate criminal activity? Man, I do not know. I do not know where to find any kind of stats related to that, but this sounds an awful lot like fear-mongering from the Treasury Department because they do not have enough of a handle on it, and so they're trying to appeal to people's sense of, I don't know, national pride or duty to be good citizens and make them feel like they need to avoid using NFTs and cryptocurrencies in order to avoid enabling criminals. I guess. I'm not sure. Not totally sure what they mean here, but I am a bit concerned about that. Just a bit. Shout out to MeanHash on Twitter, on crypto Twitter, who linked to this article and specifically jumped to a specific part of the article, gave me the anchor tag. But this is over on dqydj.com. Interesting. I don't know what this source is, and I feel kind of bad about that. Let me jump to the bottom of the page, see if we can find out more about this source. Don't quit your day job. This is hilarious. Don't quit your day job. May be compensated by our partners if you make a purchase through our links. That's hilarious. They are Amazon associates. Cool. Good for them. This is great. Clearly investing, net worth, income, personal finance, and engineering. This is fun stuff. Great name for a blog, though. and especially financial blog. That's great. But it's the average net worth by age plus median, top 1%, and all percentiles. This is great. So this is in the United States and conducted between February 2019 and then early 2020. They don't really have a whole lot for 2021, but the bottom line is that this is good data, right? So it shows us roughly the selected net worth profiles, or the different kinds of median net worth, et cetera, but net worth profiles through the lens of median, average, and then top 1%. But median net worth by age is all broken down right here. And I just wanted to briefly show you this source of information. Wanted to show you this site. I think this is a brilliant page. And I think that people are becoming generally more aware of this info, generally more aware of potential financial targets at certain ages. You can see that unfortunately things do tend to fall off after the age mid-70s to late 70s. And in fact, kind of there's a little bit of a valley. There's a peak in the mid-60s and then a valley after it. And kind of interesting sort of ratcheting upwards in people's general net worth all the way up to the mid to late 60s. And then again to the mid to late 70s if they are fortunate enough to live that long, and then kind of falls off after that point. But the median does not look so great. Most people, I think, imagine themselves having rather owning a lot more by certain ages, but by the numbers, this is what people actually tend to own by a certain age, or have by a certain age, even though they wish they had more, right? Wishing ain't having. Here's the average, right? Not the median, but the average, and it appears a little bit higher, but now you may be including some other assets as well. And then the top 1%. This is what the 1% lives like. That mythical 1% that is out there controlling everything, right? They're controlling the entire world, if some of those reports are to be believed. But this is what people who live in that way live like. And these are the people who are, yes, millionaires by net worth. And I think that cryptocurrencies in general, blockchain and cryptocurrencies in general, do give people sort of a better opportunity to make these targets a reality. And what do I mean by that? I mean, in the same video, right, we talked about the potential for crime, right, with NFTs and transfer, but for NFTs. Then there's more breakdowns here farther down the page. I don't want to get too deep into that, but there you go. So house versus no house, it's pretty great. Or deleting the value of a house, pretty great. But I love this breakdown. I think this top 1% net worth target that we currently see, many of us envision ourselves being in this category, or definitely want to be in this category. And I think that cryptocurrencies and trading within this space, investing in the space of cryptocurrencies, NFTs, and digital assets, finally is making this a reality for retail. And this was not a reality before. Real estate can get you part of the way there, but it's just not the same thing. It isn't. It never has been. Real estate is good, but it's an ongoing job. You can not quit your day job, like the name of this outlet, this blog. You don't have to quit your day job to start to hit some of these targets by investing in cryptocurrencies. Now, I would be loath if I didn't say this to you, but again, this is not meant to be legal financial business advice. I'm not telling you what to do with your finances. I'm just commenting on the obvious state of affairs. There are people out there who are achieving targets for income and for investment that they never dreamed possible before. And it's thanks to cryptocurrencies. It's thanks to blockchain tech being applied for cryptocurrencies, decentralized exchanges, automated market makers, yield platforms, and all the rest. These are things that just could not have existed before. I'm not giving you advice to just point to the facts that this is now a reality for people who take cryptocurrency investing seriously, educate themselves, and know how to obtain yield. All right, that's kind of the news for today. Tell me what you think about these articles, Shiba, the Bitcoin polemic, and then the U.S. Treasury announcement, as well as this site. Don't quit your day job. I absolutely love it. I'm going to be bookmarking this for future use. Let's take a look at DApp Radar. Take a look at specifically the NFT section right here. Going to go specifically, rather, over to games and take a look at some of the top games on blockchain. It looks like Cat's World, Splinterlands, Alien Worlds, Farmer's World, and Upland are all the top 5. Interestingly, 3 of the 5 are available on Wax. I didn't expect to see Wax in a leaderboard here when it's got a market cap that's still below $1 billion. As we know from our portfolios. Wax, I've been talking about it for a while, is a lot like Cosmos. It's an unsung hero of a side of the DeFi ecosystem. Very few people are taking Wax as seriously as they should, in my opinion. Wax being the Worldwide Asset Exchange, right? That's the name. It's kind of the acronym. Worldwide Asset Exchange. It was custom built for NFTs, and it was custom built by people who are law-abiding citizens and were working with well-known brands to kind of help take some air out of the tires of this narrative, right? Thank you, U.S. Treasury Department. Warning received. Got it. But you do have some people who've been playing nicely in this space for years now. Wax is one of them. So it's great to see them finally coming up here on this ranking, right, on blockchain games. But they're in the top 5 by way of users. Let's take a look at the volume filter. Looks like, oh, you know what? The top one is actually Cat's World as an ad. You jerks. Okay, let's open up the full rankings instead, just for games here on blockchain games. I don't much like being marketed to there. It looks like it is a very different proposition. The top one, Splinterlands, yep. Wax it's swept the top 3 of the leaderboard now. When we get rid of an ad, and I apologize for showing you guys ads. I don't like doing that. But the top 3 there, Upland on EOS. It's interesting to see that anything on EOS is ranking at all, let alone in the top 5. I mean, imagine that. And then BSC is here as well, right, with Alien Worlds. And then, of course, with some of these other titles here, Bomb Crypto, and then, others as well. But man, Splinterlands, just taking it. I think I get why the bro Ken Bosak was playing it so actively last year. It's just amazing, guys, to see that. You'd expect to see maybe some others as well, but I'm not going to complain there. Interestingly, the first Polygon entry is on number 6 for Crazy Defense Heroes, and then it is stacked in the rest of the top 20 here with Sunflower Farmers, back online with a corrected smart contract, Arc 8, PegXC, and then some others. BSC as well under Xworld Games, Mobox, and others, filling out that top 20 and showing up quite often in that top 20. We could just filter to some of these blockchains, but I want to keep it at that for DApp Radar. We will be looking at some other segments, including DApp Radar down the line, guys. This is something we're going to be recurring to on a regular basis. Just one of those tools that I think you should be using. Just a heads up. DeFi Llama is one of the others. We always look at the top chains so we can evaluate which network is gaining dominance. And this is something we've been doing for weeks, rather for months now. So you're welcome. If you see other YouTube content creators just talking to you about this tool now, well, again, you are welcome. When I find tools, I want you to have them. I want you to be empowered to make better choices. But here we are, TVL on Ethereum at 61.45%, not looking half bad. Let's take a look at some of the other dominance. BSC at 6%, looks like others, right? Just others altogether, 6.66%. But we got Terra actually at 6.69%, BSC at 6%, Avalanche at 4.6%, Phantom at 4%, Solana at 3.9%, Polygon at 2.41%. There's the stacked ranking here as well, guys. We can see Polygon in the number 7 spot there. The rest, as you heard before, with the percentage dominance there and their 7-day change right beside it. Top 10, rounding it out, guys, is Tron, Kronos, and Osmosis. Guys, Osmosis is coming up in a very big way. You've heard me talk about it. Single protocol there, but Osmosis is far more than that, being part of the IBC gang. It is disappointing to me, to say the least, that only Terra and Osmosis are shown in the top 10 by way of IBC-enabled networks. I think that there should be a category here on DeFi Llama just for IBC-enabled networks. There should be a way to sort for that, and I'm a bit disappointed that that's not the case. I wish we could see that. Other platforms here use the inter-blockchain communication protocol to great advantage, and I think we would benefit from being able to see that. So cool to see that. That's the way it's broken down. Let's delete our EVM style chains just to see how that shapes up. It is Terra in head and shoulders above everything else, right? So $14.4 billion versus the Solana at $8.4 billion. It's just a huge, huge head start there. Tron at 4.2, and then Osmosis at 1.3. And everything else is below $1 billion in total value locked. But that top 3 it's impressive, but it's still shocking to me that Tron is on that leaderboard and that IBC in general is not just dominating the top 3 between the ecosystem. Or giving Solana a run for its money, as it is Terra is already, giving Solana a run for its money, but between all of the IBC-enabled projects, I think we would see a far more dominant position for those projects. Tell me in the comment section, do you understand what I'm talking about when I talk about IBC? Do you need me to do a better primer? Because I can. But yeah, I feel really strongly about that. Cosmos and Tendermint or IBC-enabled projects, I think they should just be represented there much more heavily. Guys, before we move on to our next bit of news, I wanted to shout out this particular episode is sponsored by vEmpire, and I'm so excited to present this to you. vEmpire is the world's largest decentralized metaverse investment organization. The official vEmpire protocol incorporates different strategies to incentivize metaverse tokens, staking to fund the battle against centralization. vEmpire is entirely focused on protecting decentralized technologies through virtual property and metaversal asset acquisition. A little bit more about it. It's the first ever metaverse token staking platform. It has a dual and triple yield aggregator. It's play to earn NFT trading card game, cross chain, ERC, BSC or BEP20 assets, OEC. It's the industry first DDAO. They have 358 Axie Infinity Scholars, top 5 trading card NFTs on OpenSea, owns 18% of the Star L metaverse. Top 250 Bored Ape Yacht Clubs in NFTs in ETH Strategy, and 2 more Mutant Ape Yacht Club, Axie Infinity, Avagachi, and Influence Guilds, Soul Bridge, and Atlas Pool. And they're partnered with Neo, Chainlink, MEXC Global, Gate.io, Bittrex, Polygon, Influence, ETH, ICO, Pantera. And they've been mentioned on Twitter and various other media outlets like Forbes, Yahoo Finance, Cointelegraph, Infinity Gains, DeFi Ape, Crypto Blackbeard, Lil Moon Lambo, Crypto Newton, as well as VC backing from Adiana Adventures, Lucid Blue Ventures, Moonwhale, Prime Block Adventures, AKG Ventures, Coins Group, and then, of course, the token itself. What you need to know is that the ticker symbol is VEMP. That's VEMP. Or VEMP, total supply of just over 810 million tokens, circulating supply right now of 172 or over 172 million tokens, and it's on the ERC20 network, BEP20 network, as well as OEC, right? So ERCs, BSCs, and OECs, so you can look for it on all those platforms. Pretty amazing stuff. Definitely amazing stuff. The floor price of land since they first started buying it has risen 960% in Sandbox and then 660% in DCL. They're trading at a market cap which is lower than the floor price of all their NFTs. It's an incredible value right now with the price earning of 144. Pretty awesome stuff, guys. I can show you some slides on this as we near the end of this. Pretty amazing, guys. No competitors to this really in the world. First mover advantage. They launched the 31st of August last year. Started before all the hype. Huge assets in the Sandbox and Decentraland. 20% ownership of Starlink's metaverse and the largest token holders, Guild, and almost 400 scholars. They're on gaming, on platform gaming within metaverse gaming. New democratic DAO. That's what the DDAO is for the first in category. And they're allies with Shiba Inu, which means that the Shibarium news that we mentioned before will be relevant to vEmpire. And then 4 mentions from Jiho, including on the AXS staking pool. So yeah, they facilitate DeFi-like staking pools of metaverse tokens, paying yields in their native token, VEMP, as the primary yield, then using the token's stake to build giant war chests of virtual property, NFTs, and real estate within those worlds. They apply to play-to-earn games both on the platform and within the metaverses, and their first game is due this week. They have games ready to go for Sandbox's launch as well. I need to mention, so you can see them, or scroll through so you can see them. They've got a team that is public. You can rather take a look over here, go through the team. There we go. Go to the team page. Just want you to see their faces. Thank you again to the vEmpire group or the vEmpire team for sponsoring this video. So love being able to shout out teams that are public and open and making serious moves. There's your CEO, Dom Ryder, COO, Mike Ryder. Guys, I was going to say the Knights Ryder. That's a bad joke. And you'd have to be British, I think, to even care. Anyway, Harvey Woods is their marketing and operations manager. You got Jack Dolby there as well. And then Peter, the research analyst. Advisor team is stacked. Yeah. As you see, such as like Kyle, you got phenomenal advisement on this team, guys. There's a reason that they've done so well so far, and these are the kinds of projects that I'm just always flattered when you're willing to sponsor one of our events like this, one of our streams, or one of our videos like this. So, audience, please do go check out the V Empire project. I think you will not be disappointed when you take a closer look at this project. I know I was not when they reached out to ask to sponsor this video. But the light paper, the white paper, it's all there, guys. It's all public. The Q4 report from last year, and then their strategy, their roadmap, it's all out in the open. So go take a look at that, guys. They're just winning, and they're looking for new territory to go conquer and win with more people. Whether you want to be involved in the play to earn side, you want to be involved from the governance side with their democratic DAO, or if you want to be involved just as from an investment standpoint. This is not, by the way, an endorsement to buy on my part. Just need to say that for the record, guys. Not an endorsement, just saying you should definitely go take a look at all of their media and educate yourself on it, guys. This is meant to be a starting point, right? A conversation starter, not a conversation ender on V Empire. So go take a closer look. Appreciate them sponsoring today's episode. All right, guys, GPU mining profitability. What do we got here? Got the RTX 3090, top of the list, very top of the stack. And when we look at profits, yep, it was a fluke. Yesterday's numbers were an absolute fluke. Let's put our real numbers for cost basis for power at 14 cents per kilowatt hour. We got about $3.67 on that RTX 3090. This is a $3,000 card, ladies and gentlemen. If you buy it right now on eBay, or if you buy it private sale at current sort of average prices, public prices, you of course can find it for a lower price than that if you really do your homework, if you really scour for a deal. But the reality is this market has still wound up being a seller's market. It's very difficult to find GPUs, even still, at a reasonable price, or what most people would consider a reasonable price, let alone MSRP. So this is a $3,000 card for just that's earning about $3.67 per day on average here in the United States. Anybody who has told you to buy GPUs in recent history, I think has been doing you a little bit of a disservice, or they've got access to GPUs in a way that you could not emulate with your day job. So please do not take advice from people who don't have skin in your game. I've been issuing warnings to you, lovely audience, against just jumping into hardware purchases. And I'm going to stick by that. I did the same thing when Chia hit the scene and everybody started FOMO buying hard drives. I'm going to say the same thing about GPUs now. Though I think, you've heard me stay consistent on the matter anyway for the last couple of months. So I guess I'm not really changing my story and just sticking to it, not shifting at all. That's my recommendation right now, is just be cautious out there. NVIDIA RTX 85,000, also, like, it just gets worse as you go down the list, basically, in terms of daily profits. Let's go to the bottom of the list, see what the biggest damage is here. And it looks like the biggest loser right now would be, I guess, the R9 380. It's funny that it's in the money at all, but that's on Ycash, just barely by a couple cents. Clearly, nobody, I think, is in the right mind is mining on this card. But let's take a look at some of the coins that are profitable to mine. We got Flux. Well, it's on the list anyway. Ycash, Nimic, Raven, Ethereum Classic, Ergo, Zero, Beam, and let's see any other names. Yep, Equilibria, Firo, and then the rest. No, Bitcash as well. Interesting to see Bitcash running on that 1070 Ti. Very interesting. There's an architectural difference there that makes Bitcash hit the leaderboard. But then that's about it. Nope, no other unique names to add to the list. But then, of course, top of most of these lists is going to be Ethereum. We do have a little inclusion here for ALF, right, on Blake 3 algorithm, so it can be mined concurrently with Ethereum on LHR models. I think T-Rex is adding support for this in their miner. I've read some people get really excited about this. It's Alephium. So shout out to the homie Chris Vega over at Serpent X Tech, who brought this to my attention a couple weeks ago. I've not been able to carve out time to do a deep dive, but I think I need to. It is here on the mining profitability charts, and I need to just be public and give credit where it's due, guys. Serpent X, the homeboy looking out, he told me about this. And so if he has something about that, I want you to go check out his channel, and I will do a follow-up on this, guys. That is my word. I need to do a follow-up on this to honor my friend's request. So Serpent X, thanks, man. Appreciate that. But this is coming up on the stacked rankings, or rather on the rankings for profitability. First time I've seen it here so far. But and just for that LHR model too. So interesting to see that. Anything else that's a surprise here? No, not a surprise. I guess LHR models here, and then 3080 Ti, which I believe is natively an LHR, it's there as well. So even on the top 3 leaderboards, Alephium is showing up. It's it's been able to show up on those rankings. Let's take a look at our mining portfolios, guys. So just our mining portfolios today. We're not going to look at any other custom specialized portfolios, just mining. And on the GPU mining portfolio, we've got Flux still in the #1 spot, still returning a 10x even with current market conditions. Even though we are, I think, there we go. Total market cap is crabbing today as of the last time it was measured, crabbing a little bit sideways. Bitcoin dominance at below 40%. Ethereum dominance at below 20%. But here's Flux just marching on, guys. Flux just keeps on going. I want to correct something that I think is a little bit of misinformation. I don't think that it's right to call what Flux is doing proof of useful work. I think it is a little bit more fair to just say that it's got a service node network. So instead of running your typical master nodes, when people are contributing to the incentive model of Flux, they are offering a service node. What's the difference? Maybe I can go over that in another video, but I just let me just start by saying that something a little provocative. I don't think what they're offering is useful proof of work or proof of useful work. I think what they're doing is they're measuring the output of a given, or the offering of given service nodes, and then they are compensating it with a block subsidy. But we'll talk about the difference in another video. Ton token is #2, guys, returning about 100% profit over that. Everything else is just downhill from there. Let's see what our biggest loser is on this list. Looks like we start losing on Raven Coin. Any kind of wrapped representation of Bitcoin is still in the black or in the green. Raven Coin is the first one in the red, and it looks like Haven is the worst one in the red. 82% down since we added this portfolio entry. Just not looking good for Haven right now. It's close to that $2 value buy area. It dipped a little bit earlier this week, and so if you were looking for Haven at below $2, you missed your entry point. Sorry about that. If you believe in the long-term vision and strategy of Haven, this might be considered a value buy. Do consider also that its current market cap is above $32 million. So there is, currently, there should be enough of a developer fund from their pegging algorithm when people are converting to stablecoins or they're offshoring to stablecoins or the stable stores of value in the Haven protocol, then there is a fee going to the devs. So I don't think they're starving. That's what I'm saying. I think they're going to be able to continue to deliver on their promise. BitTube, also below $1 million. Swap below about $250,000. I don't know how these guys are still holding on. It looks like the only trading I see in those charts looks like it could be manipulated or bot trading. I'm sorry to say that. Makes me really, really sad to see that. Zano still showing a good face, is at over $15 million as well, but it's heavily in the red, guys. Same with Etho Protocol, Ergo, and some others. So I don't know what the future holds for some of these projects, but they have really high valuations, so they may be able to continue to soldier on. But those are our biggest losers in this portfolio. Moving on to hard drive mining. It's been a bad outlook for a while. Looks like storage and MaidSafe Coin are in the black, though. That was not the case before. Everything else is in the red. Our first loser is Sia Coin. Worst loser is Chia, right? Chia is still below $80 per coin at 90% down from when we first created this portfolio. Shout out to the poor investor who has created a hit list of content creators who started talking about Chia and then stopped talking about Chia. I noticed I did not go on that list. I see you, brother. Thanks for looking out. I do have it in this portfolio because I want to be able to compare it to other hard drive mining coins. This is important for us to do. If people had just taken some of my warnings and cut their losses, right, had a stop loss, they could have, even if they just wanted to keep it in a, air quotes, like or kind investment, they could have flipped it into a different hard drive mining coin. And back when MaidSafe was, kicking butt and taking names, they could have vastly improved outcomes for their portfolio, let alone some other coins that we have here in the portfolio. But whatever, people like to sell the bottom and buy the top. So have fun with that, folks. I hope nobody's in my audience is getting too wrecked by Chia. I hope you're okay. CPU mining coins. Raptorium is still top of the list, even though it's had 7 days of pure blood. 12% down. I mean, you see the 7-day, it's actually the worst on the list, but it's still #1 for the profit and loss. 13x up. That's how good it is. You'd have $13,000 even after starting with $1,000 investment or input. If you were taking a moon bag, if you were just cutting, some people do that, one way or another. Not here to offer strategy or advice. Some people take 50% of their bag after they've hit a certain target. Others just take their entire profit off the top and then leave in their initial. Others just take out their initial plus a certain percent. You figure out what the strategy is that's right for you. But I'm just going to say it's obvious that there is something here. There's value here. There's profit to be taken. Do be sure that you take some profit without dumping, right? Be responsible with these projects that you support, but do take profits and be responsible with your holdings too. Far too many miners get wrecked by holding on to old bags. Basically, it just go, not that this is going to be the case with Raptorium, but other projects. But far too many miners get wrecked by holding onto bags for too long. So you see right here, there's profit. I would suggest that people stay smart and take some if they haven't already. Epic Cash is a number 2 at about 700% up, or about a 7x up. It's pretty awesome to see that. So definitely profit there as well. Yenton still in the green, still in the black. First loser, Quantum Resistant Ledger. Worst loser, Wow Narrow, down almost 80%. You hate to see it, but its per coin price is almost still at 10 cents per coin. I love to see that. Not quite a price parity with Dogecoin, but I think it's a far better use case. ASIC mineable coins. Yep, top one is still not actually ASIC mineable. It is that cloud mining token or tokenized mining system, GMT token. So take that for what it's worth. Bitcoin is number 1, but it's only up about 6%. Not huge profit after putting in a $1,000 investment. It's only about $65 profit. First loser is Nervos, but it's not that bad. Consider also that with mining coins, we wind up getting these at a subsidized cost. In fact, it's literally called a block subsidy. So we're getting these for the cost of power, not for their retail price. So hopefully anybody who's holding Nervos was able to obtain it by mining. But that's the first loser. Worst loser is Pirate Chain, down bad, 80 cents. Maybe, let's see. Oh man, now I got to see. What was our value buy for this week on Pirate Chain? Because it looks like if we go to our 7-day, we had a value buy all-time low at 65 cents, I think. Is that not all-time low. That's 7-day low. But yeah, 7-day low. Oh, all-time low. Where are you? All-time low would have been sometime, back in November 2020. Dang, sub-cent. Pirate Chain. People who are holding on to their Pirate Chain are still very, very happy because that's literally 100x that they've done since that all-time low of last year. 100x at its current pricing. So certainly anybody who's a long-term hodler, Pirate Chain is extremely happy with the current state of affairs. So anyway, but still in the context of this portfolio, down 81%, not looking so good for them. FPGA mining. Let's take a quick look at just FPGA mining, guys. Cadena is still very much in the money. Got over or almost 9,000, not quite over 9,000 in profit on that initial 1,000 investment there. And then 0x Bitcoin doing what it does, having a red 24 hours, but green over the 7-day. And then that flipping back and forth, that high frequency swing oscillation right there. It's pretty amazing to see. Always wondering who's out there making money with 0x Bitcoin. Got to be somebody we know. Current market cap at $12 million. That would definitely be enough to sustain the trading efforts of a smaller group of individuals to wash back and forth like this. I'm just wondering who out there is doing this. Got to be somebody. Digibyte is our biggest loser, though, at almost 70% down. Guys, that's our mining portfolio. Take a look at the cost to mine one full Bitcoin. And let's just see here. We got cost to mine one full Bitcoin. Let's go with our trusty Bitmain Antminer S9. What does that look like? Looks like we'd have to have 9.5 cent power to break even. And at 5 cent power, you are in good shape. We'd have to have 9.5 cent power just to break even. I've mentioned before that most people are going to be able to get about 8 cent power no matter where they are. And you're barely keeping your shirt on at 8 cent power. Do reconsider possibly co-location or possibly just rehousing or reselling your current ASIC miners if you are in that category of really low efficiency mining gear like the Antminer S9. All right, that is a full episode. Guys, definitely appreciate you being subscribed. Definitely appreciate you checking out those articles we talked about earlier on in this episode. Let me know what your take is on those. Let me know what your take is on some of the tools that we've gone over as well, such as DApp Radar and DeFi Llama and others. I think I want to include some others as well, and possibly just do a different segment just for DeFi, and then just a segment that is on mining. You tell me how you'd like to see that shape up. Also, do be on the lookout for the second channel. I've gotten permission from members of the community, such as you guys. You're the reason I make this media, but I've gotten permission from community members just like you to do more, to go ahead with the second channel. I'm feeling pretty good about it, but I think it'll be entirely beginner focused. Tell me in the comments, what kind of beginner focused media would you like to see me create? Would you like me to focus just on cryptocurrencies, a little bit on privacy, a little bit on technology, say like Linux, or technology explainers so that beginners can get better at all this stuff? Tell me in the comments section. I'm dying to hear what you have to say about it, guys. You're the reason I make this media. I love your face. Remember, stay private and mind your biz. Thanks for watching all the way to the end of the video. Be sure to like and subscribe, and then check out mineyour.biz to sign up for Mine Your Biz Insiders, our exclusive newsletter where we talk about all kinds of mining deals, crypto-oriented deals, security deals, privacy deals, and everything that we can't personally bring you here on the channel, but can talk to you about in email. Also, check out our swag shop where you can see the Mine Your Biz phone. You can also see dedicated sites for Bitcoin, Monero, and other meme coin swag, as well as our friends over at Flux Network. All right, guys, thanks for watching to the end. You know I love your face. Remember to stay private and mind your biz.